Yes, started. Hey.
Yeah. Yeah. Have you already recorded and started?
Yes, it started.
Okay, that's fine. We'll talk offline. Yeah.
Okay, good. So now you can see my screen. Last week we have discussed a lot in detail about the stocks. We were also discussing about what could be the way to enter. I have shown some of the um, way of adding the fundamental checkpoint on the chart. And actually, I have gone deep dive into it and I have added more. And today I would like to add you all those things. And why is because I feel that if you have a view at one place, at one side, then it gives you more clarity and you can correlate the things easily. And while doing so, I was also able to find a lot of things which is not known easily. For example, a lot of time a company give good result, right? But how do we compare it against? Do we compare it against last quarter? Do we compare it against last year? Do you compare it in the whole year? What is the highest and what is the lowest? We never think that way because we can't see that. We just say, okay, Q4 result has came, Q3 result has came. It has increased Q and Q by 4%. It doesn't help, right? I mean, on a number basis, it's fine, but on an absolute basis, it doesn't help. So what I understood is that we need more filters, and that's why I have added EPS, which was there, PE, which was there, ROE, which was there, but I have added also a few more things like debt to equity, because this helps us to find it out if a company is taking extra loan from outside, if that is going to hurt him in long run. So any good company should decrease the debt to equity ratio, and normally it is other than financial institutions, normally it should be less than one. But a financial company like a bank or an some company like Bajaj Finance, they can have it more. And I have also added free cash and revenue 1 year growth. I will not go deep into it, but I can just say the more it is in positive, the better it is. So all in all, I got all this information from ChatGPT because I feel like this is good enough, more than good enough to analyze a single company and the chart, which is anyway our baseline is. So I would like to just show you one, and then I will go with the question and answer session that I thought to start today. And then one company I want to show you is Avas Financiers. Now, this company is nothing special, okay? I just find it while setting this particular structure in our trading view, and I found that this company is actually a hidden gem because the EPS is keep increasing, PE is decreasing because price is not appreciated. um, the earning, the QOE is increasing, or if I would have to say, it has actually maintained on a higher side. The debt to equity is increasing because it's a financial company, right? But as I said, if it is not too drastically high, then I don't really worry about it. And and there are different way to measure it up. But even if I can say that it's lending more money in the whole market, even though it is taking extra money for himself, so it is fine. And somehow the free cash is not available in trading before it, but the revenue is pretty okay. It is always positive, more or less. So this is a good way to say that even though the chart has not gone up, the fundamentally it is intact. And I have checked all its competitors and peers, and this is one of the way which I would like to also go today, is that we will going to check its competitors if the chart is same for competitors, and then if the fundamental is better on one side, like this company if it has better fundamental than other company, then this is something to be checked, and this can be taken, this can be bought based on certain uh, plan. Because last time we have not gone deep into it, we were discussing about when to buy and how much to buy, yeah, all those things, but we have not gone deep into it. We have just started and discussing all together. So that also we'll like to go together deep into it. So first thing first, we talked a lot last week, yeah. Do you have any open question on top of it?
Mm, no, not currently.
Not currently, okay. I was actually thinking about 30 stock which we had talked, and we thought it is yeah, it is too high, yeah. And I was
Yeah,
thinking
yeah.
the same, that maybe we don't need 30 stock for ourselves, and we have to minimize this number. And I was thinking that we have to come up with a number, but it should be less than 30. That is something that I'm also now believing, because it increases at least some opportunities. If the whole thing is increasing, then my portfolio will also will increase. But if I'm going to say that 20 is the number which I would also like to stick with, yeah, in that case I would also like to have strong stop loss logics, because one stock will be of weight 5% of our portfolio. So it is important that if something is not going out according to our plan, then we also cut off the position whenever it's possible. So 20 is the number. Maybe we will stick with 15 or 25 something, but I think 20 is a good number to start with, and I agree to this. And if Jairaj would join, I will.
Okay. So I have a small question on this one last week itself.
Hmm.
So consider the stocks. What is this stock which is already in the, if it is already in our portfolio?
Mhm. Um, yeah.
So what is the stock? Because you have already allocated some percentage of money to that stock, right?
Yeah. Okay.
HDFC or something.
Yeah.
Consider we are having HDFC in all the three portfolios, okay? So we
Mm-hmm.
have put the 1 lakh amount of money already.
Mm-hmm.
It is there.
Yeah.
But now if we start like that here, then allocation will get deferred.
Mm-hmm. Yeah.
How exactly, see, our theory which we are going to do something different.
Yeah.
Maybe we have to create another like grow account or I mean something. So
Mm-hmm.
just to try this 20 stock in separate application maybe. That is
Mm-hmm.
another.
Mm-hmm. Okay. Um, yeah. Okay. That is a good question. At the moment, I can think of a solution like small case. You know, small case.
Yeah.
So in a small case, you can make your bucket or your portfolio, and there you can add the stock, and then you can execute the buy or sell order from small case itself. So it is highly integrated with Kite. So in that case, you can maintain and view your performance of the 20 stock in this case together, plus individually also. In a small case, you'll be able to see if HDFC is the example, like you purchase 1 lakh rupee HDFC, so it will be able to show you how much you have profit or loss on top of it. But in Jirodha, if you are using it, of course it will have the combined result. But to better tracking, small case is what I believe we should use it, because yeah, uh, we need to see a segregation of what we are doing and not what we have done in past. So yeah, any third party portal which can do something like small case is good enough.
Mm-hmm. Or else totally put it into the different application together.
If you can do that, okay.
I mean, this on
Yeah,
option.
yeah, I think all those things are possible.
Mm-hmm. And one more another suggestion, maybe our input. I don't know if everybody are comfortable. See, we already analyzed, right? We have already have something in mind, and we already have the companies in our portfolio already.
Yeah.
All the three. Why don't we club in the sense just review? Consider that I will share my all my current right the list of so if any of the companies is matching in all the three portfolios, right?
Mm-hmm.
Right away we can pick that. Right away we can pick that. If there
Mm-hmm.
is anything,
Yeah.
just because I mean we will do the research and we will try to find the 25. That is fine.
Mm-hmm.
Just to shortlist already we are already having that right in our portfolio. Why
Mm-hmm.
don't we see the common equity of the share on the company which are we are already having so that you will have more confidence, right? Everybody is having that means like that's what we are doing, right? That's what
Yeah.
research we are currently doing.
Yeah. Okay. Okay.
Comfortable with others as well.
No, that is, I think that is what is needed, because we need more people, because that give us more open discussion on top of this. I think if you ask me, I think this is a good idea. Okay. Um, so for example, I come up with a list of 10 stock and you come up with a list of 10 stock. It's all fine. But if you're coming on the 10 stock from your portfolio, it's okay. Okay. And I also come up with my 10 stocks, it's okay. But then it's also, we need to do a higher research because maybe there's a larger circle, a larger sphere. We are just part of it, right? So maybe I'm focusing only on the Nifty 100 and you're focusing only on Nifty 50. Yeah. So there may be an opportunity which we are talking about because what was the context? Context was that we wanted to use our next opportunity, which will come after 1 2 year, and we wanted to make 5x 10x on top of it on the portfolio level, right? So there may be a possibility what we are holding is not part of the next bull run, or maybe there is something similar. For example, you have Bajaj Finance, and maybe next time there is a peer of Bajaj Finance which will be the leader, bull leader. In that case also, it will be wise for us to go in and around our choices so that we can at least can choose the best out of it. So it's an iterative activity, yeah. So, but it is a good idea to start with that we come up with the list of the stock from our portfolio.
Yeah,
Um,
if there is anything matching already,
yeah.
let's see all the list. Maybe I will send to you and let's take it from him if he's okay to share. So if there is anything matching, let's
Mhm.
pull the list. Maybe next week, let's discuss on that.
Hmm. I think this is also something that we discussed last time. If you remember that we have to come up with some 20, 30 stocks and we can discuss this. So this was also my intent that we will discuss about what we are already aware of, those 5 stock or 10 stock, and then we can open discussion here together, and then we can see if it is good enough. And maybe we have to come up with a larger list. If we have to stick with 20 stocks, then we have to at least analyze 15 in number. Yeah. And I'm trying to project a way how to analyze, but I'm also open to discuss further on top of it. Yeah. Okay, but that's a good way of coming. If you say you need 10 stock to discuss next time, it's also possible. It's fine. Yeah. Okay. What else? Do you have any more question?
No. That makes sense what I'm telling.
Of course.
Just to see the current portfolio, like instead of going on the top of that, instead of going to search it again,
Hmm.
if we are having any common stocks in there, and if we think that it will give us good returns, we can pull it.
Yeah. Perfect. Okay, great. Um, Also, I would like to add that the main focus of all the activities, like an hour long call, is not to come up with just a list, but to also completely get awareness about the stocks. Also, try to go deep into the fundamentals, technicals, also with the competitors. And more than that, we have to also talk more about when to buy, how much to buy. So all those things are part of it. As we discussed last week, that there is a space available for HDFC Bank to grow, and any mid bank has more space to grow up. So we have to see all those opportunities, even though maybe something is great, maybe the upper side is fixed. And I would like to add that in one example. I actually have one example on Bitcoin. Yeah. So I will discuss that today. Let me take a note that today I will try to show that upper view, because I was checking that with Chat GPT about what is the max value Bitcoin can go up, and that was pretty interesting. Although we can take that separately also, but that help us at least to identify or to find it out. Should we invest now on Bitcoin? Okay. So maybe I can show that quickly. So if I have to say what are the options in crypto that you can use it, then the easiest way would be to find the top two and top three crypto available. So just not going in detail, I can say you that most of the thing that people use it is Bitcoin. We have Ethereum. People have Solana. Then you have Cardano. Okay, so example, right?
Dot dot.
Doge is a meme coin. So Doge or Cebu is all meme coins. Okay, yeah, that's fine. Now, um, if we say that what is Bitcoin? Bitcoin is a digital gold. So we believe that in future that the value and the use of Bitcoin will be relevant just like gold, and people would like to use it because it can be generated at a limited number. Okay, so 2.1 million is, I think, is the number that we can generate. But even we say that today Bitcoin is of 1.5, or example, right? I'm just saying a number, 2 trillion is the market cap of Bitcoin. So how long it can go up? So the easiest way would be to compare it against what is we have today. So as of today, gold is of 16 trillion, if I'm right, all together. Okay, and in between you have US, I think US gold or US dollar something, which is also is about $8 trillion. So altogether, I can say that Bitcoin can get max 10 times from here, even if it want to replace gold. You get my point? I'm saying whatever the value of Bitcoin is, and the upper side is unlimited. Revenue wise, it will be big. I mean, something to go from 2 trillion to 20 trillion is enormous amount of money, huh? But in the end, even if you're putting 1 rupee or $1, it will become 20 rupee or $20. That's it, because it's already high, right? So is it a wise decision for you or me to invest there? That's my question. If you are saying 20 times is the risk, so 20 times is the reward, and risk is anyway very high, is it a good time? So if you see the chart, this is the daily chart, this is the weekly chart. So on the weekly chart or daily chart, you can see an breakout. Okay, this is the breakout which has happened, and it is easy now to make it. But the point here is that the breakout has happened, but and it is now at some 98,000. I think it is very much going in 6 digit. But even from here, if I say how more it can go up, so there's a limit to it. And I can say you that even in stock market, in Indian stock market or somewhere outside, we can find a lot of stock which can be 20 times in next 5 year, 10 year, 20 year. So we have to not see only the news around, but we have to also see capability of upside. Okay, so if we are telling that a crypto can become 20 times, like Bitcoin can become 20 times in 20 year, then I'm not very much fond of it, because Bajaj Finance has done more than that in last 10 years. Right? Although people have make maybe not that much money out of it because the early investor has exited, but still, I mean, uh, if I say in 2011, it was at 50 or something, 50, 60, and now it is at 6, 7,000, right? It's already a multi-bagger, like 15, 20 times. So my whole point here is that instead of thinking only about big names in the open market, we have to see at what price we are getting it. And even if I have to say about Bajaj Finance, yeah, it looked like it is consolidating at a price, and there may be an upside, but there's a limited upside. So Bajaj Finance, right? How big is Bajaj Finance as per you? Let's see. I don't remember exactly. Um, so Bajaj Finance is about a 4 lakh crore company. Okay. If you see, it is the largest in its sphere, and the second is Geo and other thing. But still, right? I mean, there's a limit for the whole industry to grow. So maybe the industry will get double in future. Okay. Even in that case, if Bajaj Finance will continue its performance, it can get another 4 lakh crore market cap, which is like the stock will be from 6,000 to 12,000. That's it. So that is not what we want. In the end, we want whatever we are buying to go at least 5 to 10 times, right? So okay, so this is the baseline I wanted to set first, that whichever particular instrument we choose, that instrument should have high upside possibility. Okay, and I want to write it down here so that we follow it later also, that instrument should have 5x to 10x upward possibility. Yeah. um, okay, so even in that case, if you see, Ethereum is about $400 billion. Yeah, Solana would be maybe 100 $200 billion. So if I have to say that Bitcoin will be 20 trillion in 20 year, that's 10 times. But if Ethereum, which is 400 billion now, if it will become 20 trillion, example, right, then it is 50 times. So the opportunity of upside maybe is not as much as Bitcoin, but if it reaches to the level that we are projecting for Bitcoin, in that case it is 50x return. So if I have to take a risk of 10x compared to 50x, I would stick with Ethereum because Ethereum is equally good. Okay, now this is an example. This can also be taken with example of stocks, but the all in all, what I'm trying to say here is that choosing market leader is wise, and it is better to choose something which is just below it, because then the upside possibility is high. Okay, this is one side. Second, and something stuck to my mind from last 1 week, and I wanted to say here is when to sell and rebuy. I don't know if I can explain you this. Um, Maybe let's take Bitcoin example, and this is not a buy sell example, but I wanted to say you, and this is maybe how intelligent people are thinking, right? The big guys who are putting their money in crypto world, we call that whale. Like in Indian stock market, we say it as operator. In crypto world, we say it as whales. So just think about it, okay? Maybe I will just make weekly chart bigger, and we'll talk about the last bull run in Bitcoin was in 2021, 2022. So something, I mean, it has gone up from a level of 17, 15,000, and it reaches till 60,000, 70 precisely. But 60,000 is where mostly it has gone up. So just assuming some Prem or some Naveen would be discussing this, and they would have seen, oh, there's an all-time breakout happening at this amount, which is about 20,000, and it is going 3x in how many days? In 140 days. So in 3 months, somebody would have make three times, 3x. And they would stuck, they would not sell because they have their own logic, even though market has corrected and it goes up again. So that gives up a false assumption that oh, it will go up. And after certain time, when it started falling down again, they actually become long-term investors because there's no way out. So so the way it comes down, it gives us a assurance that it's going down. But when this goes up, maybe people like you and me would have purchased more because we believe this is going up again, just like it's gone up from here. And I'm not saying what is right, what is wrong. I'm saying that in 3 months, somebody has made 3x. Even if somebody would have sold here, okay, at 40,000, which is double in a month, it is fine. And he can look something else, and when the opportunity comes, maybe here, he can bought it again, and he can sell it again at some 50% profit, and he goes out, and maybe again when this breakout happened somewhere here, he purchased, he hold, and now again he is enjoying something like this. So this is another possibility, that we buy and we sell so that we can rotate our money. I know the main question here is that how to time the market. And the only way what I'm saying is to justify is that we don't want it to time the high. We wanted to just say that we will just decide how much profit we're going to take home. And there's a way to identify. Okay, I'm not saying exactly how, but there's always a way, and that can be identified. I have some theories in my mind, but I'm saying that if you decide that you enter today and you will only hold until it become 2x, and you come out of it, this is better than waiting it to become 20x. Because even if Bitcoin will be 20x in 20 years, it will not be straight up, right? It will be something similar again, like this. So all this time you're sitting on your money and it is going down, and there's no guarantee that it will not go down more, it may go down more, we don't know really. Okay, but if you come out of it and you re-enter whenever you wish it, then first of all we will be having peace of mind because we controls and we are not controlled by market anymore. And second, even if you lose an opportunity, it's fine, you are using that money somewhere else where the opportunities is there. I wanted to add this point more with an example. um, and the example would be, you have 10,000 rupee, okay, and you invested in a stock and the stock become 2x, so it is 20,000, right? Now you are holding it and then the stock become 8,000. And this is all 1 year, huh? So this is actually have given 20 minus 25% return to you, and your money become 16,000. Yeah. Oh, it's not, sorry, why 16? um no, sorry, not like this. It become 16,000, so it is minus 25%. So your money is, oh, okay, I'm doing something wrong. Okay, just say the share price is 1 rupee. Simplicity, yeah. Share price is 1 rupee, right? Now you purchase number as 10,000, right? So you purchased 10,000 rupees share, which become 2x, so it become 20,000 year one, yeah. And in year two, and you're holding, yeah, you're a long-term investor, you're smart. And then next year it becomes 16,000, so your money become this, and actually it is minus 25% in 1 year. That's what we are saying, right?
Yeah.
And year three it become 20, let's take a good example, 30,000, 32,000 for simplicity. Okay, so it become actually again 2x in 1 year, right? And your amount becomes 30,000. Okay, this is you, or this is maybe a person who is now a long-term investor. But if you try to make a chart out of it, how the chart would be? um, so if it is x and y, and it is something you invest 10,000, it become 20, it comes down to 16, and then it become 32. That is what we're talking about, right? So you invest 10,000, 10,000, it become 20. Oh, what happened? Oh, yes. Okay, something was wrong. Okay. 10,000, uh, 20, 16, 32. Right. Now, if you have purchased here and you are saying that you are waiting as a long-term investor, great. But if you are other guy who purchased here and you have not waited till 20, you exited at somewhere like 18, because you have some logic with you. Okay, you said that I want to exit the market whenever this is about this amount, and then you are saying whenever this market will go above the last high, then only I will bought, so you will bought it here. And then you say, okay, I make another my plan 50% whatever I wanted to take on my capital. So if you ask me, Naveen, I have a feeling that this is how the real people earn money, and not like the real retail investor who actually think about Warren Buffett way of earning. Because even today, if you are asking me how can we make a CAGR making continuously sticking to a stock is not going to happen. Maybe out of 10, one stock will be which will continue go up, like a trend, like trend kind of stock. But not all stock are like trend which keep going up without any slowdown. And whenever this happen, when you take out your money and you lose the upper potential, is fine, because in this period you are putting your money in somewhere else. And why I keep saying this is because to increase the CAGR possibility, it is important that we do not get over invested in a moment when there is a big consolidation happening, or there is a moment when it is even going to fall. Since we have limited number of stock, this is important that maybe we should say that we entered in a moment when the potential is high, either based on momentum, either based of opportunity, either based on some sector rotation. And whenever we entered, we decide when to go out, and maybe we can reevaluate when we reach to the number, right? It's not fixed, but once we say, okay, we have eaten a good amount of money, let's come out and let's find some other opportunity. Let that old ride to go, so that we at least will never say that it went up but we loses the opportunity. Even in the case of Bitcoin, I know that all the people who actually has made money would have stuck in this, because this chart is very cunning. So people would have make money. Many people have onboarded here, and then market goes down for like 2 3 years, and then all the people uh, either would have become long-term investor, and or would have cut their position when it was going down. So this is how market plays. So the most important thing is, if you are here and market is going up, entered here. But if you are here and market means, when you see the chart, if the chart is here, there is no way to putting money in, because we know that the upside is limited, and there's a way to identify. I will tell you, the upside is limited. So in that case, entering here is of no use, because there's a more risk than reward. And now you can ask me, like, how you know how up it can go. I think the easiest way is Fibonacci series. You know this, right? Um, okay. I will show you a different perspective of it, which more of the people don't know. Um, Maybe I can make this chart bigger. Yeah. Okay. And let me remove it first. See, this is, I think, the most important thing. Huh? This is not secret, but people know but ignore it a lot of time, because there's no guarantee that this will happen. So whichever point you take as high, from that moment you try to find the bottom. And when you see a chart in past, you can say that, okay, we know there was a high of 20,000, then there's a low of 3,000. Okay, make a Fibonacci from top to bottom. Okay, and the upside. Okay, so for example, you come in and then you say the breakout is happening here. So this is one of the most riskier level, to say that you're entering into something which has already gone up in past. But this is better if it goes up. So for example, it goes up, you entered here or here or here. Now how Fibonacci work is that, from a moment when you have make this up and down chart, 1.6 is the number when it should stop. First, listen to me, yeah. 1.6 is the number when it should stop. If it did not stop and it goes up, it shows that it is getting overpriced and it is getting stronger, and there's a huge chance then it will burst. So this has gone till 2.6, which is the next level. It didn't even stop it. And if you see here, maybe 1.6 has been broken up, but then after certain time, 1.6 has been retested from the top, right? You can see that, but it again goes up. So if I would be here, I would say, okay, 1.6 has been broken up, and now it is taking support at 1.6. So it is a good thing for me. It is a good thing as a sense. I know that if it does not really break 1.6, then I'm not going to sell it, and it goes up. 2.6 is the next place where it should stop. Okay. 2.6 is something where also we can see it has gone up. But from the moment we are calculating, this is already very, very risky area. So I think the moment it crosses 2.6 is the moment when people should start deciding to sell, or at least would find a possibility when to sell. And I'm talking about only breakout stocks. Huh? This is not for every stock, but normally if this happened, so if I would be here that moment, I would have sell somewhere whenever this has gone up 2.6. I will not really see a lot of things, because I know the max is 3.6, which is this one, this line. And why I'm saying max 3.6? Because normally any chart without a proper correction should not go till here. it should have a good correction and then it could go up. But in this case, there was almost no correction. So this is like the point where the burst happened and then it has fallen down. Okay, now you can say this is one example. How can you generalize this, right? So can you tell me any stock which in past has gone up really, really high after a fall?
It's
Hmm, good. I didn't think that way. So, sorry.
because recently we have seen it is into multiple.
Yeah, that's fine. That's fine. I think I'm not here to say which is good, which is bad. And this is a subjective study, which I'm just saying about. Because in this case, if you see the high and top is really, really far, right?
Maybe this is totally not a good stock, right? Don't think.
Maybe, but yeah, but maybe even in this case, if I have to make a Fibonacci series from here to here, then we haven't reached that level, huh, which I was talking about. It is still under the first 23%. So our logic for what I said upside is starting from the top of previous high. But anyway, this is also can be explained. But in that case, I will take another example. Okay. But there's another way to check this up, even in Fibonacci, is the correction somewhere here. See, um, and this is a tough thing to identify because this chart has never been in bull phase. Um, the starting is difficult. How to say? So now it is at, okay, yeah, let's take, this is not a right way, but let me say this. I take this as high.
Take this one only. Ready for the time. Let's take
Oh, okay. Are you sure? Okay. Ready, go, Chetan. Uh-huh. Nice. So, okay. Shall I take this one as high and low? 2018?
Mhm.
Okay. I think that was also the moment when we identified this stock, huh? Okay.
Yeah, 2000.
Well, you tell me what I said is working here.
It was like 2.6, it went
Mm-hmm.
3.6, then started falling.
That is the max. As per my experience, if you have no correction in between, then this is the max. But this is just a theory. Okay. I'm not here to say that this will always happen because if you see Fibonacci capability, it is even up 4.2. But I'm telling in just one sentence, the more without correction it goes up, the more chances of it to fall down. So you should be alert when this it cross 1.6. And if it does not really, I mean, if you ask me, I would start it selling from this point, 2.6. I would not wait till 3.6 because this is just market legacy that it has given you this much extra money, but there's no guarantee. All in all said, if I remove this, I will take more example also. All in all said, if I say the high here, if you take money from here to,
Do you small question here.
yes,
So we have started writing like Fibonacci chart from the top to, can you write it down again? From
mm-hmm.
2018 to,
Yeah,
from here to you pull towards the April 20, right? So when exactly you will buy here?
that is, no, we haven't reached that stage yet. No, Naveen, we haven't discussed yet when to buy. I'm just telling, I'm just telling how long or how up a stock can go up.
Okay.
And when should you be aware that there's something wrong and you should come out? Because see, how I started is this, right? How you would know and how would you stick to it? Like, if you ask me, I would better stick with the logic that I will sell at a point, if it is 2.6 here or 3.6 here or 1.6 here, whatever. But I wanted to come out of it because I am not ready to bear all this volatility. Because even if you see in this example, I mean, if I like to remove this and would like to make it again here, okay, you want me to do it again? say this is the high, this is the low. Yeah. So what is happening? It tries to go up and it taken support. So it's like it's not a direct way up, it goes down, but then it goes up again and it goes to 1.6 and it make a huge candle like this, huh? Doji kind of candle. And then it is stuck and it's struggling, and then it goes up. It make a base here, it goes up, and it is 2.6. But even in this case, in this example, there is no time when this has really corrected. Although it has corrected, it is a better chart than the earlier one because here it has more time wise and price wise correction. But this is how, if I see a thing, I will be more interested. So if you ask me based on at least this check, although this is not a great check because this is a very small period of low and high, but even this example, at least I know when I should be aware and I should be cautious. And if you see the chart also knows and follow all these things because this is normally how after a correction a bull run starts and how it is stopped in between, like multiple phases it stops and then it goes up. Yeah, I want to take some example here. um, I know you're not on this stock, but I would like to open Netflix, and this is one of the example which I just come up right now. So there was a moment, and we're just reading chart, huh? This is nothing to do with buy sell. We're just saying we're reading a chart, we're trying to learn something out of it. So this is a moment when we find a top and high and we put this Fibonacci and we said, okay, there's a moment when this crossed the up and this is now entered into a phase of um, 1.6, right? Between 1 to 1.6. Now, I feel that a lot of stock do not really get into this part, but whenever they do, right, it is a very strong period when you make a lot of money, lot more quicker. And when I say that, I mean it because all the people who are bearish to this almost lose all their hope when this price goes up because they sold here, they sorted, right? And then it goes up and they will keep holding their position. But once this goes up, then it goes into the uncharted territory and then there is no stop. So, for us to identify when to buy or at what moment we should increase our investment, this is the golden period between 1 to 1.6. Tell me more example. I would like to go more into it. Yeah. Take international. Anything. Not take Walmart. Oh, well. Just yeah, but Walmart is a really crazy chart, huh? So why I'm telling crazy is because I don't know what happening into it, but it is keep going up. It doesn't really following any correction at all. Yeah, it is like trend kind of chart. Didn't really worry about the things. So yeah, if you find a chart like this, and if you ask me when to enter, then we have to go with some other assumptions. The logic that I explained will only work when you already have a correction or mostly price wise correction. Here you see everything as mostly time wise correction, which means that it's stuck to a price and then it goes up. Let's take something else. Let's take something from India. Tell me something, something in an Indian stock. Okay, don't be hotel. Okay, fine. So this chart is not so long. It's a relatively smaller chart, I would say. So let's take the high and the low. Okay. So as per Fibonacci, once it tries to go above its all-time high, it comes down, which is fair enough. And again, it's try up. And this is the period where it goes up. And at 1.6, as per me, if you see from my eyes, 1.6, it is stuck. And then it is now correcting again. Whether it goes up, down, I don't know. But if you ask me, I would be really happy to buy it here and sell it here. Just, I mean, if you do not be too greedy, then making money is not very tough. You know what I'm saying? See, because even in an year, if your stock gave 45%, is it less? I'm just asking you. I mean, just think about it, okay? 45 it is. I mean, it all depends on what capital you put or how and when you entered. But if you ask me, I say we have a plan. We are discussing about a plan. We are not entering even though this was going up. Somebody outside who doesn't really know what we're talking about will just say, why don't you buy here? Why don't you buy here? Why don't you buy here? Why you buy here? We're not talking about all those things. We are saying that we'll try to find something. Maybe we can discuss that meaningful discussion, and then we will say, okay, let's try this approach. Maybe this is better and safe approach because we have very less amount of shares to buy and we want it to be safe. Yeah. Let's take another example. M&M. I'm just taking a random example for now. If it has make any, yeah, because this is because I know a lot of people do believe that this is going to be the next bull run player, huh? I'm just taking an example. 2018 high, Corona low, okay, all-time high, broke somewhere here. This is the period when you can say that, yeah, although it was not easy period, and and all the logic that I'm talking here, right, is something which can be questioned, right? But the point here is that we know when to sell. For example, I bought here, right? And I say, okay, it's play along here. And I would say, okay, I will sell when this line will be breached, right? So if it does not breached and if I'm here, then the upside possibility is there. And whenever I would say this happen, and whenever this now goes to 1.6, it actually given us more confidence because it didn't really goes up, which make it overpriced. And it's like you are climbing a mountain and you are not stop in between. So if you do not stop in between, then you will fall down. Yeah. So here it stop in between. It is good for us because now it gain more power to go up, and maybe that's what it has shown, right? So from here to here journey is pretty smooth, and the smoothness was actually more than that. So as I told you, right, 3.6 is where I believe if I have entered here, right, for me from 1000 to 3000 is 3x in 2 year. I'm done. I have no hunger left. So if you're asking me, would you buy here, I'm not with you. Will you say, and maybe I will be the guy who would even have sold here like 2400, 2600, maybe even 2200, because I know that the time for correction is near. And there can be two types of corrections, which is, I mean, it's possible. One is time wise, like this, where it just stuck to a price, it make a base and then it goes up. Or second, it will come down. And how much it come down? It is something similar like this. It's not exactly like this deep, but it has to correct. So coming back to the logic, I believe that we have to kind of cap the upside. We need to say we cannot do this more than a particular number. Yeah. Okay. You have any question before I go next? Yeah. You do believe that this is a good insight to check. Yes, this is one of the parameter we can utilize. Yeah. Okay, great. So yeah, if I have to write it down, is that, and this is something I wanted to also write somehow, is that uh, we need to cap the upside. Yeah. And I'm just talking about at the moment Fibonacci 3.6. Okay. It can go up. So it is not even 3.6 somehow, 2.6 to 3.6. Okay. Great.
we need to develop some framework. See,
Yeah,
depends on the multiple factors, and not only we can have because Fibonacci works for the, as we saw, when there is a more correction,
mm,
it will help us more.
yeah,
Correction, then we need to bring out the multiple factors, right?
yeah,
Like that.
exactly, exactly. No, that's perfectly fine. And at the moment,
Yeah.
I'm trying to put all the attributes one by one so that we can go deep into it. Yeah. Okay. Now, um, before going to more stock, I think more stock is something is the more stock is something which can be taken later because seeing chart is not difficult part. Now, when to buy? I think this question was something we didn't really go deep dive into it, and I think we need to revisit it again in future because this is something we cannot really define in one meeting. But I believe that buying is a personal choice, again, like selling, and it has to be in a split. Even example Mahindra, right? So, for example, right, it goes up. Maybe we would say that this is a good company fundamentally. Let's see how the fundamental of this company, even that moment. So, in 2020, when this company was okay, yeah, in 2020, when the company was going down and then it started going up, that moment, if you see the EPS was negative, you see that it means that the company was making loss. And of course, in Corona time, nobody would like to buy a new car, no SUV. So it was going down. And what I understood in past 1 week is that whenever a good fundamental company EPS goes from negative to positive, it's a jackpot. I'll repeat, huh? Whenever a good company with a good chart, good founders, EPS goes from negative to positive, it's a jackpot. But having said that, that's not the point just because you wanted to buy, but that is something which means that it should be into your watch list. If the EPS is keep going up from negative to positive, that is the moment when we should think about buying it or accumulating it together. So uh, we talk about this, right? Like how should we buy in chunks? So we should try to say 20% deployment whenever the EPS has become positive or the second time it become positive, and then see the chart. Maybe this is the line, like this is the line when you say it goes up, and put another chunks to it. Let it ride up, you know. So, I mean, till how long we have to put is something I have not yet really think about it, like how we will split our 100%. So I have 100% money to put into the stock, like 100% of example, right? That like I have 100 rupees and I have to put 100 rupees into this phase from here to here. Now from here to here, if I would like to put 100 rupees, when to put, how to put is something I have to come up with. It is something very difficult to identify. Yeah? There's no set rule on top of it. We can use Fibonacci, we can use EPS, we can use other factor like is the industry itself is on upside or downside. All the things has to come together. But I believe that's a good way to focus that we are not entering in moment when EPS was going down. You know what I'm saying? EPS should go up. Normally, when that happens, also the ROE goes up, right? Um, okay, that's what I mean to say. Now, I want to take an example like Reliance. Yeah, this company is continuously giving good return. Okay, the EPS is increasing, the ROE is kind of stagnant. If you see, right, it is like from past 5 years, it is almost not going down, but it is stagnant. It's stuck to a level. The company is kind of try to get I think after 2020 at least it has tried to decrease the debt, but now it is almost trying to increase its debt. And even if you see, right, I mean, things are fine. The PE is going down, the price is also getting corrected, and it is also feel like it is consolidating to a level which is like high of 2022 mid. So this looked to me as a cheaper stock where the EPS is maintained, going high. The other factors are also looking good. So if you would have to buy, and let's do this way, yeah, and this is not a buy sell thing, but if you have to make a logic and we say that let's believe that this stock bottom has been made and this is the bottom, just example, yeah, in this case, in this case I would buy whenever this will be above 1600. I would sell whenever my amount will be between 2200 to 2600. Having said that, that would be 35% to 55% money. Now, to do that, the company need to increase or do better fundamental, like the EPS should go more up, the ROE should go more up. So all those things need to happen. Okay. So whenever this is going to happen, maybe we are interested. And if you're saying you are happy with 55% upside on Reliance, you would like to put in one of the 20 share that you have, fine. That's a good deal because it's a stable company. Yeah. This is an example I wanted to show that how we can think about something which is not yet happened. Okay. So I was talking about when to buy, right? So I'm, as I said, I really have to think about it. But if you ask me, I believe somewhere it when EPS and ROE shows strength, okay, it's like first chunk, yeah, and increase when goes above all-time high. Well, this is just a suggestion for now. Maybe we need to revisit it again at some point. Okay. Okay. Now, how to average up is something also we need to think about. But I believe that, like we have seen for Mahindra and Mahindra, that is the good example. One halt of Reliance on Reliance only. Okay. Can you go back to the Reliance and Corona time phase? Yeah. I'm not expecting another pandemic actually. Yeah. Consider before the make a Fibonacci series somewhere before the Corona. One second. 2020. One second. Yes. What do you want to make? Where? There is 2020. Oh, this one. Yep. Yeah. Yeah. Oh, consider we are starting 2020 January, okay? Consider there is no chart after that 2020. Yeah. 2020 Jan you said, which is here. 20 Jan. Jan or Feb. Yeah. Okay. Okay. Position we will take that time. What? Okay. But okay. We have to definitely compare the last 2019 somewhere around that. Like, okay. Yeah. Okay. 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 No, that's a fair question. So let's see. Okay. Let's see when the last high or low is present to us. So it feel like this is the moment. It's like 2008. Yeah. Okay. Because before that, I don't see any more place. So now if you see, we entered when the fundamentals was getting better, but let's stick to the chart. It do the all-time high at 2017. So this is the moment, as I said, I will be more interested to. And luckily, this is also the moment when Geo was launched. So I would have entered here. Okay. And um, if you see, even with this example, Naveen, 4.2 is the,
Okay.
yeah, somehow,
Okay. Exit on 2.6, right? 1.62.
yeah.
By the time you would have taken exit, right?
Mhm.
By 2.5 or 2.4, Corona would have happened.
That's the max. See, I think that is the beauty of Fibonacci series, or specifically, I would say Elliott waves, huh? Also, because a lot of things, right, is pre-decided. We are just there to ride a train. When we enter into a train, we think the source is where we are starting, but that's not the source, huh? Source of the train could be in past, could be in far away. So normally speaking, if in 2020, which is this one, right, this is the point, right, when you are saying, so let's talk about your example only. So so yeah, let me make it monthly. It makes more sense. Then I think it's easy to compare then. Yeah. Yeah. So we entered maybe at 1, we said here, when the price was 380, and then between 1.6 to 2.6, we believe it's a tough period anyway, and it goes down. Okay. And it breaches 1.6. We would have, we should have sold it in between, also in between here. And if we believe that this will go up, maybe we should bought it again, because ideally what it is now doing is that it is taking support on 1.6 of the previous Fibonacci series. You see that it is taking support at 1.6. It is good enough to, for us to say that okay, the stock has corrected and now it is going up again. And that is something, all different algorithm I'm talking about. This is not something I think will always work, but this is good enough to say that we know when to exit, we know when to enter, at least in this example. And even in this example, I think yeah, it depends on when you were exiting, but at least you're not losing money. You see here, you're not losing anything. You entered to a moment, and this is the beauty, yeah, you entered to a moment until when it has fallen, so you lose almost nothing other than time. You lose some 2 3 years of time. But even also here, if you believe that stock will rebound first than other stock in Corona, you would not have sold this, or maybe you have sold here, not here. So all these things are possible. That's what I am saying, that we have to go deep dive into it. Okay.
Yeah.
Great. Any more question on this chart?
Yeah.
Okay. Averaging up is something I don't think we can come up with it today, because all chart are different, all stories are different. We need to understand the bigger theory, right? Like opportunity wise. For example, if you say that can in India people stop buying four-wheeler from tomorrow? So answer is no. In that case, we can say there's an upside possible. If four-wheeler, if people stop buying four-wheeler from tomorrow, answer is no. In that case, the upside is possible. But if I ask you, from tomorrow on, there will be almost no guy who would like to apply for a power connection, electricity in his house. Is it possible? I mean to say, in your village, in your town, in your neighborhood, everybody has electricity, right? Do you think maybe you can say it's better electricity is needed 24-hour, only 20 hour at the moment, but the upside of electricity power generation is limited because you almost has reached to a threshold. So in that case, okay.
No, there is, I mean, if you see the electricity consumption, right, year on year, it is increasing.
Hmm.
There is no saturation point.
That is the volume. That is the volume. I'm talking about connection only. If I say you know 100 people in your neighborhood, do all those 100 people already have power connection for them, or do you think 80% have, 20% do not have?
I think most of them already having. Okay.
You tell me which do not have it. Can you name even one person who do not have electricity in his house?
That's not
So
already done.
saturation level for getting basic electricity in house is done. We're talking about volume. It is more like trading, right? Like previously we have less number of people trading. Now we have more number of people trading. So volume is high. So all those AMC company will make more money because there's a high volume. That is of course right. Even in future, people will do more trading, more volume. All fine. But that's what I wanted to say, that if you see through a lens of possibilities, then you would say that power sector possibility is not only just because of electricity, but then you have to see, if I am sitting in my house and I want to put two AC, or I wanted to put something which consume more electricity, right? In that case, the capacity has to increase. So then we have to go deep dive into the power sector. Which are the stocks which will get benefited if I started consuming more intense power electricity devices? Then which company can get benefit out of it? It is no longer only to say that some power company like NTPC will get benefit out of it. It's not so simple anymore. Same with vehicle, four wheeler. So you may say that from tomorrow on there is no there are more people who still would like to buy a four wheeler, but still in four wheeler there are categories, right? Those who have sedan would like to go to SUV. Those who have SUV would like to go to something like bigger Fortuner or something, and all the guys would like to move to more sustainable mode, cheaper mode like electric cars or hybrid cars. So even though the four wheelers remains four wheelers, the possibility of four wheelers increases. So maybe you can say, if in India, example, 50% people have cars, in future again those 50% people will buy a new car even though they have a car, because they wanted to upgrade or transit into a new phase of driving. So that's a possibility for us to concentrate. And why I'm talking about this now is because if we see the possibility in a business, then only we should average up. If the possibility is low, then we should average down. You got what I said.
Yeah, I got it. But average up means
Stock wise.
average up and average down.
Yeah. For example, in Reliance itself, right? So this chart, I mean, I will not go to fundamental of the stock, but my point is that anybody who purchased it, right? He put an SIP.
Means is going towards top, do the averages.
Average up means, if I have a chart and the stock is here, goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down. Yeah. Now, average up means you bought it here, you bought it here. I'm not talking about selling, huh? Only buying. You bought it here, you didn't sell it here, you bought it here, you bought it here, you bought it here.
Is doing good and
Oh, that's a different discussion. What you know, we can think about all the thing, but my point is this is average up. Yeah. And average down would be, I mean, yeah, if you ask me, I'm not in favor of that design because that's not so nice. You bought here, goes up. You bought here, comes down, goes here. Make double top here, 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 here. So this is average down. Even though you believe this will go up and all, um, this kills more people because this take more time to get corrected, although there's a huge opportunity to go up. But this is something is not possible for us to take it in the 20 stock list, because this is not how we can make a CAGR of 20-25%. It's not possible. Only possibility is you entered in a place when it is going up. Example, PNB. I don't know if you have seen this, but better to see today. See, Daily chart. This is monthly. Okay. Weekly, I need it. Yeah. So there was a moment when the chart started falling down, right? And this is the same moment when the EPS, which was negative, started decreasing. So how an EPS can get correct? First, it will decrease the loss, then it will have a stagnant profit, and then the profit will increase. That's how normally you do, right? If you have a lot of loan, then you first decrease your loan, then you get into the break even, and then you can increase the price. So something similar here. Okay, now as I told you, this is a jackpot moment. But there is no guarantee to it, huh? It can still go down because you have just come out of something which is bad, but there's no guarantee that it will go up. To go up, we need to find some more things, and everything is not Fibonacci. But still, when we see the EPS, we can say that what's happening. You can say you entered here, and then you also have to bear this phase. And in this phase, nothing has happened. If you see that 2021 to 2023, nothing has happened. For 2 years, your price was almost doing nothing. So if you want to stick to this period, believing the fundamentals is fine. But if you ask me, I am not interested to wait this period. I'm interested because we have only 20 stock and we have to rotate it. I will be more interested when this will happen. This is more like chart, right? We are negative to positive, then consolidating the EPS, and then the EPS going up. So 3rd July 2003, let's see what happened that moment. 3rd July 2003, this moment. If you ask me, this is the moment I should have bought. I should enter, not buy, enter. Okay. And also in the chart, you can see there's a breakout. You see that, right? So fundamentally, the base has been made in technical chart and in fundamental financials. So it is possible that this will give us profit, and it has given in this case also 60 rupees become 130 in 2 year 1 year. So it's a good example. So I will be more interested in this kind of opportunities. We have to be on top of a chart, waiting for a right moment to enter based on all the possibilities we have and all the systems we have in place, and then enter. So maybe we have 20 chart, 20 stock in our portfolio, and this is 21st one. And you are saying, let's buy, it's keep going good EPS. And we decided, no, let's wait for a moment when the price and fundamental both support together, and then only we will buy. You are with me? Yeah. There's no guarantee when this can fail, huh? But this is at least give us more opportunities fundamentally. So we are not against the trend. Okay. So this is mostly what I say. Then buy. Okay. Avoid average down until you find really something. Yeah. Never exclude anything. When to go full on. This is very important. So wait.
Yes, bank. Let's go to this bank. I want to win one point. There's this discussion, right?
Yeah.
Let's start quickly. Let's see what we consider. Today also we are going to keep the 20 stocks, right?
Mm-hmm.
Team discussion happened and we selected this bank
Yeah.
at that time. Consider like 5 years back, we selected.
You tell me a date when should I start? Tell me a date when should I start?
18 mid after.
Fine, fine. Okay, but why would you buy Yes Bank at this price? Okay, assuming 1 second, I'm moving my chart like this. So
yeah.
so assuming we do not know in future what's going to happen, we are in 2018. Now, why would you buy here?
I just want to see the chart. Okay, definitely if we see our chart, we will try to avoid.
Okay. Let's make Fibonacci on top of it. tell me which Fibonacci, which is the high and low I should take for Fibonacci. You tell me, I will take that. Should I take this one, this one, this one? Let's take one. 2013. 2013 makes sense. More recent. More correction. Okay. Now, the depth of the correction. Yeah. Okay. Definitely, we will not invest at this point of time. So this is fine that at least with 2013 Fibonacci, this is not an entry for us, even an exit for somebody. Let's take this one. This is the top and high. Even this doesn't help me to get into it, right? If you are saying, let's take this one. Okay. So this help, huh? So example 2017, you make this chart and you say, Prem, I will enter when this will become go above 1. Am I right? You entered at a price of 300. From 300, first of all, it retested your logic. So this is a moment when we should think about coming out, because it really shows that you are wrong. But assuming that you say, oh, okay, I have a limit of my stop loss, I say 10% stop loss, I'm okay with. Yeah. So you say I did not solve it here. So it goes to 1.6, which is fine. But this thing making double, triple top and re-coming back into the zone of 1 to 1.6 is bad. And sticking it there, playing it there, good enough to tell you that whatever you're thinking is not good enough, right? And the chart itself says, and just see the beauty, just see the beauty, Naveen. It touches 2.6 and then it goes down. So if you would have bought, I mean, the worst you can do is based on this, what we said. So at this point, when you say, okay, I'm done, I lose all my hope because now it's coming from that moment down, 2.6, there's no way back. So you are out. You are one of those intelligent guy who actually close all its trading position at this level or at this level. So fine. And the fundamentals, can put the fundamental for this. Let's see. This. Yeah, that's the problem with trading view, is that if you go much in past, you can't see. So let me try to see it here. I mean, it's not like it's a bad thing, but we have to navigate ourselves. Okay. Even here, if you see, they are maintaining from 2021. Yeah. Hmm. Wow, okay. Let's see profit loss. So 2017, uh, net profit 3000. Before that 2500. Before that 1000. Before that, so it was increasing. Yeah. And if you see EPS 7, 9, 10, 12, 12. So good. Yeah. And then you see 18. So 14 to 18, and then the EPS is fallen by more than 50%. So even if you're following EPS logic, this is good enough to tell you that, okay, my exit is near, because it went to an EPS which is of 2013. So you're telling me that a company which was actually making profit actually went back to 5 years old. I mean, it's like whatever money you're making today. If I tell you that, would you join a new company in of 2013 salary? You will not agree, right? I mean, this is unacceptable. And that is the moment the prices actually, I think, also get started correcting, because it's also visible on the fundamental, and then there's no way back. So fundamentally also, this shows the same thing. See, in the end, whatever we're talking about will collide together. There's no way to say that things are contradicting. At some point it will collide together, and then you will make a good decision on top of it. And that's why I'm trying to add fundamental and technical both always together. Yeah. Yeah, this is a good example. What more? You fellows of the which one? Since I don't know whether that is JPS. See, associate. JP associate. Oh, okay. You are going in completely that direction. Okay. Okay. Let's see. This is like you are trying to find what went wrong for them.
Correct. I mean, what decision we would have taken if we have chosen that company
Mm-hmm.
out of considering we are going to take 30 companies, right?
Mm-hmm.
Either one of them or two of them may be S bank or it might be the JP associate
Mm-hmm.
going forward. Who knows? No, right? Anything can happen down the line.
Yeah. I think I think the question what you're asking is when to exit. That's it.
Yeah, of course. But
We,
data so both the things.
we do not want to predict which will become JP associate. We just wanted to say when we will be out. That's it. Nothing special about it. Okay. Now let's see this chart.
Okay.
Let's see this chart. Let's go to a point because see it has been falling for 2008. Huh? So I will not check anything in recent 10, 15 years because this make no sense. Let's see the moment when it actually.
Consider you have chosen the stock in 2007.
Yeah, that's what I'm trying to. I'm trying.
And 2000, we are in 2007 now.
Great. And which one I should choose? This high or this high?
2000,
Selecting this high, the recent high. Yeah.
Okay.
Okay. Okay. This looks fine. Now you entered at 95 rupees. Am I right? In this with example 90, so 100. You entered it has 100. Fine. 100 has been taken as support. Goes up. I am with you. This is the moment when we are cautious and even would think to come out because our hunger is limited. Yeah, you may exit here, but even if you do not, you say I believe this stock is the next future, blah blah. So you stick and then it has taken support and it goes up again. The next is 3.6. As per me, I told you that this is the moment I believe I should sell. It goes up till 4.2 and it goes up. So this is a moment which I define it as the thing which I don't know. I don't know. So if you are interested, if you are a believer of something which is above my knowledge, you can either buy here or you can sell here, but I am out. If I'm out, I cannot really say you what's happening here. But I can tell you something very clearly that even the stock knows it and it tried to push its limit. You know what I'm saying? You're running a marathon. You have a capacity to actually run only 23 kilometers, but you are in a faith that I will do 41 kilometer. You can go till 30 kilometer and I'm with you. But if you say that after completing one full marathon, you say, I'm ready to run another one, I will not stop in between, and I will say, what you want? And you say, I want to complete 84 kilometers in the same run, then I'm not with you. So this thing which actually has given something double, but I don't see that way. What I see here is that you entered at 100, the max you entered or you exit in 200, something like that. So you make about 2x. Okay. And if you have a correction here, if you hold yourself here, then I would be more interested, but there is no stop here. So this is not a good way of going up. Plus, if you want to see other things, see here, this is the RSI, weekly RSI. The weekly RSI shows strength, and this is something you might not know, but this is a bit weird thing which I have found in past is that whenever you believe the stock is falling like this, the let me show this way. This is the moment, 2007. Anything above 70 is considered as strong. and anything above 80 is it's considered as overbought. But it is also important that every good stock will test the level of 80 and 90, and this is the moment when we are in. But whenever an RSI, which actually have started from the bottom on a weekly chart, reaches 90, it will come down. I repeat, whenever an weekly RSI, which started from the bottom like 40, will which reaches 90 in a single stretch, will come down like this. And the same has happened in 2005 also. I can see, let's see what was in 2005. So 2005, yeah, this, yeah, 2005 is this one, yeah, this one, same thing, right? Something which was um, reaches till 80 has fallen down 1036. So this happen whenever an RSI comes from 90 like this, it usually gives this kind of chart pattern. And in this kind of chart, where what we're talking about, we should be very, very strict in our stop loss, assuming we are very smart guys, yeah, that moment, and we'd say, let it go right up. Let me take out my principal, let it go up. In that case also, it goes up at certain point which we can't decide, and it started falling down. When should you close your position? When this was coming below this level or this level, so that you say you have invested 100%, you have taken 80% out at this point, you let 20% ride, and you cut off the 20% when it comes here. That's it. We will look for opportunities somewhere else.
Mm.
Okay. But this is very easy to retrospect like this in chart, but it's not so easy, huh? Like Aarti drugs. I think I also discussed this last week. Um, wait 1 second. My laptop is not getting charged. It's charging. Okay, fine. Okay. Aarti drugs. This is not a big company as such, but would be good to explain the same what we discussed. See here, you see, in 2020 it goes up. Okay. Um, Let me take an example of low and high. So can I take something like this? This is the high, this is the low. Yeah. And then it goes above our known understanding of the theory. Yeah. This is the saturation point, which I believe I should be with you. But this is something, even it can double from 600 to 1000, who knows? But whenever that happens, we can say that this is the moment when this will break down. And usually that happen. Usually. Yeah. This is another example which reminds me of JP Associate. Okay, great. You have any more example?
It's similar to the graph. So it's going to the right side, it's going towards right.
Oh, you are saying it will go down.
It's similar to that.
Yes.
I'm
That,
not telling it.
yeah, no, that's what even I remember when I see that, because it looks similar. Yeah. Okay. Nice. Um, so I was actually discussing about this point, when to go full on. What do you understand when I say full on?
See, complete confidence on that. So
Yeah. And
is that
and what does my confidence mean? So if I have 100 rupees or $100, whatever, and I have 20 stocks, so each stock I have put 5 rupees, right? Now, My 5 rupees has been invested, right? I'm already part of it. This is the moment. Example, right? This chart, the same way. I'm just exampling. This is the moment. Okay. Now we know that we are going to ride till here, not this part. But still, I'm here, and I believe this is going up. And how much is the upside? The upside is from 200 till 6 700, which is three times. Yeah. So even though I'm fully invested, this is a moment which we can actually use it for ourselves, be more aggressive, and close the trade aggressively, because this is a, how to say, this is an opportunity and also a risk. It is keep going up, right? It is using the max out of the opportunities it has, but it will also fall down drastically. So if we say that we have invested the 5% of our money, but still if we believe that this is really going up in our direction, and we believe that there may be possibility that it will go more up, will I going to take one stock out of my 20 and will going to put another 5 here? That's my question. Or another 10 here? Because that will happen, huh? If you're doing it right, and if the wind is on your side, there will be a moment when we both will think, why 20 stock? Let's make it more. And that's what even people like Rakesh Jhunjhunwala did. Rakesh Jhunjhunwala invested in a lot of companies. He find Titan in good moment and then started moving. So he started doing averaging up. But when he was doing averaging up intentionally, his allocation to the stock was increasing. So even if you see today, I don't, not today, but if you even if you see 5 years back, Rakesh Jhunjhunwala has more than 50% allocation in Titan, because he has not put it, but that the money has become that high, the wealth has become so high that the portion of his total portfolio was then belong to Titan. So even for you, when that is happening, what I'm thinking is we should not fear to increase our allocation and try to say that out of 20 I'm okay to cut down 2 or 3 stock, but I wanted to invest that money here, but with a strict stop loss. Now, is it a good idea? How this will be done, how we will choose, is something completely different. But if the full on thing is on your side, this is a full on thing, right? I mean, it will be a waste of energy if you buy it here like one stock. Yeah? Naveen has 1 lakh rupee, he put 5,000 here, his 5,000 become 10,000, and the other stocks are on the same place where it was, and we keep seeing it going up. It's a waste of energy to see that going up. We should enter for a short term purpose. We should make plan like I'm going to be here for another 2 weeks, 3 weeks. Let me try, let me play. If I can make best out of it, and we will be out of it whenever we are done. So even this full on phase will come, and it should come in your uh, management of these 20 stocks, because that gives you the opportunity to increase your CAGR from 25 to 30 or 20 to 25, but with a stop loss, because otherwise it will bring down your CAGR altogether. Mm. And this is, I think we will get some of the opportunity to, yeah. So we have, yeah, it is more like a mock drill activity. So we have to think about it. You also think about it. Yeah. Think about in your mind, check in past, what would you have done different? Because I have some opinion to it, but it's good to recome on this topic again. Yeah. And when to come out. When to come out is something very simple. Whenever I say, right, if you entered in time, this is important. If you have entered somewhere here for the first time, then you are already late. You have entered here because the risk reward is nothing, right? From 400 to 600 is 50%. Why you entered this kind of chart when you are already half done? You either entered here or you don't enter here. So if you have entered somewhere when it was 200, right, then come out max by 4.2 Fibonacci. That's it. And if you wanted to say, let my principal ride, I will take out the profit, all those things is fine. If you want to cut down by 80%, all those things are fine. But all in all, 4.2 is the max for that particular run. So any long-term investor, which I started today's discussion with you, is that a long-term investor will think, what? Oh, I bought it here, it goes here, let it come down. I will average it up here. It will again go up at some point. I will again add it up. Those things runs pretty well when you talk about in theory. But in reality, when you really put a good amount of money, we will not do that. It is something like BTC, Bitcoin, right? So Bitcoin actually have played with people mind the same way, like what I said. It actually has gone up. This is the same thing. Let's put our, I think we already put it today. But my point is that if you have purchased here, you ride it here, you go full on somewhere here, and assuming this moment you came out, so you get out of it. So what you lose nothing, right? Because the high is relatively same. You also leave this volatile phase and you are sitting idle enjoying in some other stock, or maybe would have done the FD of your profit. But that is how I think we should think about, not to be more greedy, but try to ride it in a right way. Yeah. And I think we have to retouch this topic again, because this is only my view. I think you should also come back with your more options. Okay. Last but not the least, I would like to go with some stocks. Uh, any question before I go there? You think it is insightful, new thing, great thing? Of course, of yeah. Course. This is a the next big thing. Well, then we will keep this with you in YouTube. I will come to the YouTube podcast at last. I have that. Oh, YouTube strategy. Oh, wow. Well, as I said previously, the main intent for us to upload these in YouTube is because we wanted to also come back and check ourselves what we discussed, how we executed our strategy, what would be different, um, because it's a lifelong journey, I believe. But to be more efficient, it is better to also track ourselves. So these things help. Okay. Why? Okay. I will go about Suncheck, Praj Industry. Okay. I'm not going in detail about what the company do. We don't need to worry about all those things. What I see here is that the EPS is fantastically increased. This is a dream run for an EPS, right? I mean, 2021, 4.4 EPS becomes 17. EPS itself has become 4 times. So if a stock which was at 100 becomes 700, 800 is not a shock for me. It's a good thing. Now, why I'm talking about this, if this company can come down, and if somehow we do an analysis and we say that the future EPS and the ROE still will grow up in future, or at least, okay, the bad example, it comes down, it corrects till 500, it corrects till 600. In the moment, if you see the fundamental, it looks strong. So this will come first in my list, the top 20 list, which we are talking about, because if the growth what it has shown, if we can repeat that kind of growth, then we believe that this can be a good choice for us to stick with. And this is something which we can debate, because the debt is increasing, but it is very less. Yeah. I mean, it is 0.13. So if you see that it was having no debt, so what I assume is that since the company has scaled up a lot faster than other companies, so there was a moment when the company has taken extra money from the market so that it can expand more. And that's why we see that. So if in future, based on this extra debt, if the company can continuously perform higher, then it's a good deal. So we, or me specifically, would say that let it fall if it falls, and we will buy it when this will be at a good level, right? Not immediately, maybe after an year or someday But when we find that opportunity, this is something to watch. This should be in our watch list. You would like to add before I go to next talk?
Then I will do some homework on this one just to see.
Yeah. This will be really helpful.
Yeah.
Awas Finance, I already opened this chart because this is crazy. This chart is crazy. Um, oh, what I opened? Oh, sorry, double A. That's what I thought. Why it is going? Yeah, this chart is crazy for me because the EPS is going up, ROE is going up, price is coming down. So the PE is coming. This is one of the point when we say it is getting corrected. And that's bring to the main point why all the financial companies are going down. Either you say banks, yeah, either you say small, big firms which lend money. So whenever the next bull run come, Naveen, I have a strong belief that these company will start first because these already have shown the growth in past. So if they have not really gone up as price, then they should go up first as price. See, all the things which are bad in that scenario they perform well, right? So when the things will be better for them, that moment they should actually go up. And that's with most of the banks and most of this kind of companies. There's also one competitor for it, which is called Home First Finance,
First finance.
and this is similar.
Ellipsis.
Yes, these are mid and small NBFCs. And if you see here also, the EPS is drastically increasing every time. So what is wrong? There may be something wrong. So maybe something you can check it out. Why it is not, why it has not appreciated that much, like how the fundamental has increased. But I believe that these are few of the things which can be a good take for future. And there are more. Dr. Reddy. Oh, this is not battery. Yeah. Now you can see that what I mean to say. This company EPS is increasing almost like 25 to 50, even more than 50, and price is not yet double so much, and even it is correcting. And Dr. Reddy is one of the largest laboratory company in India, yeah, still expanding. And I do believe that these companies should do better, and also a large cap. So all this kind of company would give us, I would say, more chances in future to multiply our asset because this already have the strong fundamental. Yeah. Isuzu. Um, oh, Isuzu motor in India. Suzu. Oh, hmm. It's ML. Okay. Yeah, the full name is SML Isuzu. Yeah, this is a motor company, and this is the turnaround which I was talking about. See, yes. So this company, I mean, can you explain me what exactly this company? What do you think by seeing this?
Means you mean the
Yeah,
fundamentals?
yeah,
Say that's what there is a negative EPS, right? So it got turned around in 2023
yeah,
to positive, and at the same time, there is return on equity got increased. They have reduced their debt a lot,
yeah.
mostly 50%, almost they have reduced it.
Hmm.
But the stock is not appreciated. The stock value is still coming down. So
Yes,
there is something wrong. We have to identify what is happening.
yes, we have to
And people are not concentrating on this stock.
yeah, maybe.
Yes, we have some around. That may be one of the reasons, right? Many people are not
I think
putting their money on this.
so whenever we say this, right, we actually check the market leader. So the market leader like Maruti Suzuki, they are doing the same thing, but still the price is falling. So it looks like the sector itself is in reverse phase. So
Mm.
as I said last week also, Maruti Suzuki to increase is easy, but Maruti Suzuki to become 20,000 is tough. But a company like SML Isuzu to become 2x, 3x is easy because it just need to take some of the shares from the market leaders. So if you have fundamental support, whenever there will be a new bull run, and those companies should go up. And I considered Isuzu as equivalent to Royal Enfield. Okay, it's like you can't buy a Harley, so you buy Royal Enfield. Similarly, you can't buy a big 4x4 car, so you go with Isuzu in India. So in future also, I believe Isuzu cars should go up. But these are just things to check in watch list. Yeah. Um, Federal. Huh.
So you get one stock which is my list already.
So if you see Federal, it is going up, no problem. But also the fundamentals are going up, which is good. Yeah. So if you see this way, this is a good option. So if this stock will correct like 10-20%, I would say this will be good to check further. Yeah. Another last but not the least, I have much more, but let's conclude with this. Apple India. EPS is growing, and more interestingly, the price has stuck at a number in last 4 years. It not really has gone up. So even if today you would like to put the Fibonacci here, yeah, this is where we are talking about, right? So this is actually at the level which I'm comfortable with, and with fundamental, of course. So if I would have to say that I would get FL somewhere at 1,200, 1,300, 400, this is something which we should really, really look for, because this kind of companies, I believe that can give a good return to us. But again, this is subjective. We need to see what are the future potential for this company, what the company do, how it is different than its competitor, and also how should we invest, like when, because there's a possibility that the company can even come to 1,000 or 800, we don't know. So in that moment, when should we put our money, like is it something immediately we should put 50%, or we should do a chunks of 20% whenever we believe this will come down. So that is something, at least today I'm not clear, like how should we split our money and how should we invest, but this is something which I believe should be in our radar. Okay, last but not the least, which we thought to check is the Nifty, at least. um, I think mostly for Nifty, I'm not really very good with, because I don't do all those intraday or future options more. Uh, but I can tell you one thing for sure, and is that if you want to see a big picture, and when you say big picture, something for 4, 5 year, 10 year, these corrections will come, right? So even in future, I believe that the correction for Nifty could go till 20,000. Okay, but it doesn't stop us, for somebody who is thinking of long term investing, like if you are buying ETF of Nifty, it doesn't really stop you to or tell anything different to you that you should worry about in Indian market. Only thing that I think, and this is a different way of investing, this is other than the 20 stocks we're talking about. If you want to say about Nifty investment, then the strategy is different. how I see investment for ETF, specifically Nifty wise, is that whenever Nifty weekly RSI is around 40, invest, because I'm not here to sell, right? I mean, at least I'm not, I don't think I should sell. So, see, oops. Yeah, okay. Um, Weekly RSI was around 40, it is even 30. So around 40 in 2020, I should have bought it. Weekly RSI was around 40 in 2022 June, I should have bought it. Weekly RSI was around 40 in March 23, I should have bought it. I should have bought it. I should have bought even now. So if you're doing SIP on a nifty kind of instrument, it's okay. But if you really wanted to make the edge, then the only and the best way is to buy when there is a discount. And there are a lot many ways to find that happening. But I believe the strategy that whenever, because we believe that this company will keep changing in Nifty. So we don't have to worry about the performance of the company. Whichever company do better will come in, and whichever doesn't do better will go out, right? So whenever you believe the India story is alive, then finding something around 40 and investing there is a good idea. That's what I believe, and that's what even I do. Although SIPs are on, I have not stopped any SIP, and I am also on that side which believe that we are going more down. I'm no more optimistic on the Indian market, and the reason is pretty simple, which I think most of the people do not see at the moment, is that big money comes when you have more opportunities and you are a bit cheaper. We are already on top. Let me show you something. Yeah, and then maybe we can go to your YouTube question. Um, let's take this and let me remove the volume. Huh. What does it tell you, Naveen? Is it 1.6? Do you think you find something which is not good? Yes, 3.6, it's already. So you may think that I am, yeah, so you may think that I'm making things up. But when you see things in a broader mind, you do believe that this is a overpriced market. That's what the last correction says. At least the corona correction says. Am I right? So it should correct. That's the baseline. Okay. Second, if you believe that why you are taking corona, let's take this one, which is 2021. Even here, if you see, it is already breaking 2.6, and it has not able to reach 3.6. And if you see, I also put a line here because I do believe this is the 27,000 is the max it can go, even if rebound from here. Anyway, so it is now coming down from this point, 2.6. So if you ask me, right, this is not a point where I would buy. Maybe I will, but I still would like to wait. This is not a moment for me. Even in this case example, you can say, right, I would have bought somewhere in 19,000 to make money out of it. But it is not a great moment, at least for me. Not, it doesn't excite me anymore. But if it comes down till 20,000, 21,000, oh well, it's a good thing. So we'll wait. Okay, nice. We kind of join everything with one theory today. Yeah, also anticipating for 20,000, but buying that and doing yeah, yeah, averaging. You meanwhile, for every 500 points. But if you go with the theory, if everybody believe it will go down, then it will not go down. That's yeah, because that's why we have to, for every 500 points, I'm just putting something around. No, I think it is bigger than that. It is much bigger than what it has happened in past 5 years. See, putting money where it's going down is one approach. It is like 2008 JP associate starting phase for you. 5,000 point, 2,000 point. But What I'm telling is, let it fall down if it is falling. If it is not falling, great. Even if it is falling, let it fall down first. Let it make the base. Let it start going up. Then I'm in. We will not be in when we think we should be in. We should be in when market will say that yes, I have corrected. Now I'm ready to go up. And I believe that will happen in 1 to 3 years. So let it happen. And even if you're losing some opportunities, what you can lose? Max it can happen is like from 23,000 or 24,000, the stock price can, so the Nifty can go to 27,000 and then it can come back. So all those things can happen. But first of all, if you're investing through ETF, it doesn't really make any difference. Okay. Like you're playing for yourself, it's fine. But the real money will be there when the correction will complete. So if you're investing, great. But if you should increase your SIP now, I'm not in that favor. Let it. So for example, tomorrow, right? Somehow it do the time correction here, and then it started moving up gradually. Then maybe we can pitch in. But for now, let the storm go away one by one. And I think Nifty discussion is so complicated in itself. um, the stock the stocks are not falling so much, but the Nifty has fallen pretty much in between. And there are a lot many theories around. People are making a lot of theories, like that the money went to China. Then some people says that because of US elections, the security has increased in US, so the investors are moving back to US because the AI story is there. The crypto is going up, so even they wanted to sell overbought market and wanted to invest in those market where there are more opportunities. All those things are in place, but still the Fibonacci series says us that we should not be buying more here. Let's wait. But also, as I said, once it reaches about 40, around 40, if you want to accumulate more, keep doing it. Yeah, it's one of the easiest way to invest as a long-term investor in indexes, normally Nifty. Yeah. Okay. Yeah. What more you want to discuss? That's it for the day. You can stop this recording. Okay, great. I think this is good enough. Let me stop it.